Hello, everybody, and welcome to our session today, which is August 28, 2023. This is week 35, and this is before the bell in 3D. My name is Jose Blasco. Let me say hello. How are you, everybody? Wonderful to join you as always on the Mondays to start the week and to prepare for the week ahead. To look at key markets. We're going to look at 5 markets if it's the first time that you connect with us on the Mondays. We're going to look at key markets, 5 to be precise, which are the most relevant markets in the world. We're going to do some analysis so we understand what's happening in markets like the S&P, gold, the dollar index, crude oil, markets of that sort, and this is going to help us to be focused for the week ahead. So let's begin. I am highlighting as well in the bottom part of the screen our financial disclaimer. Please read it carefully. It's going to be moving around during the session. I'm counting on you to read it completely as we are exposing ourselves to financial markets, and therefore there is risk involved. So especially if you're new to trading, it's important that you are aware of that fact. Anyway, so as we begin, we're going to be moving from, here we go, real-time charts. And from there, we will then move back to our newsletter, which has a lot of the information that we're going to cover today in a written form. And by the way, I'm going to give you instructions on the screen on how you can subscribe to our newsletter, which is free. So in case you miss some of the sessions that we do on the Monday, like today, like right now, so you can always receive this information in your inbox. So you have it handy, and you can always do this very healthy exercise of understanding the marketplace before you even start trading for the week. Anyway, so the analysis that we're going to do is going to cover 5 markets, as I just said. The 5 markets that we're going to go over is S&P 500, crude oil, gold, the US dollar index, as well as the backed Bitcoin. And the first one that we're going to start with is the S&P 500 futures. So you can see on the screen I have some particular figures. Beyond the figures, and of course on the newsletter, you also have the pictures of the charts, okay? But instead of looking at the pictures of the charts, I'm just going to focus on the real-time charts, actually. So let me move to trading view in this case, so we can get a chart, a daily time frame chart of the S&P 500 futures. And let's first begin focusing on what we call the climate for this particular market, which, as you can see, it's a down climate, which is confirmed with a thick dot. Okay, so we have a thick dot, which is red. That means confirmed climate to the downside. Notice that sometimes the dots may be thin, like in this particular location, and that means the climate is not confirmed. But right now, and by the way, I'm just noticing that the screen may be covered by the QR code I shared for you to subscribe to the newsletter. Now you can see it better. So you can see here the thick red dot identifying our climate as a down climate. Now, when looking at the down climate, it's important to know that statistically speaking, this market is more likely going to go down than go up, which is the little sign with a rain. Okay, so it's a rainy climate in the case of the S&P. It's also very important to understand from a statistical point of view, where are we at in the count, if you wish. Another way to think of count is duration. So is this climate reaching the end, or is this climate still in a stage where it may continue progressing in that direction? This is like any other climate, or a season of weather, for example, the summer, for example. So typically the summer months have a statistical duration, which is a very good value for us to be aware of, so we can have a great reference point. And sure, it is that sometimes the summer will extend a little more than expected, or it start raining sooner than expected. So, but as a reference, knowing what to expect is very important. And in this case, the climate, auto climate in this case, is telling us that a normal thing to happen, a 1 standard deviation case of a normal thing to happen for the climate of the S&P 500 futures in a daily time frame, is to have 3 candles at a time going down in that particular climate condition. We've been so far in this climate condition for 2 candles. It doesn't mean really moving down, but being in that condition for 2 candles. And therefore, 1 more candle will be expected. But from there, we would start now expecting the climate to go back to sun, to go back to blue instead of red, and have a change of climate. Okay, so in any case, let me go back to the charts. I'm using a little bit of time in this example number one. I'll be a bit faster in the following markets. But notice how, for example, the prior red climate here lasted way more than 3. So the normal thing to happen is 3. Sometimes it's going to be so much more than 3. Sometimes it's going to be exactly 3. Sometimes it's going to be less than 3. Again, a normal thing to happen means a 1 standard deviation, and that means what's expected, but not what's guaranteed. I mean, nothing is guaranteed, isn't it? But it's a good, very powerful reference. So a classical saying or quote on Wall Street is that the trend is your friend, and I'm not going to say that's not true, but until it bends at the end. And when is that going to happen? Well, when you surpass, in this case, 3 on the way down, so now you have a higher chance to turn instead of continue, even though sometimes it continue for longer. But this is when something is behaving in a way that, statistically speaking, it's non-sustainable, even though another quote of Wall Street is that markets sometimes remain irrational for longer than we could remain solvent, isn't it? So we cannot fight when a market is doing whatever it's doing. We always use risk management techniques. Could be as simple as stops or option strategies or whatever you use to protect ourselves from irrational behavior that happens from time to time. But again, using statistics as a measurement of what's expected, what's normal. Another way to say that is 1 standard deviation. So it's certainly a powerful way to think of markets in a way that is not biased, that is just relying on data. That's it. Okay, so no biases, no preferences, no human beliefs on top of data, which is probably going to be more accurate. That I mean, we can always be lucky, but not a good idea to rely on that, isn't it? So we have a down climate on the S&P. Okay, now careful here because I want to zoom in and notice the little gray line that is appearing under the red dot. So typically we have one of those gray lines when we are in front of a change of climate. Notice that before red turned blue, we had a gray line. Before blue turned red, we had a gray line. So it looks like we have a gray line now. So while today, as we speak, during the daily time frame, meaning until the end of the day, we are in a down climate, the fact is that I would not be surprised to have a blue dot tomorrow, and therefore we have a change of climate, which, by the way, it's originated given that UFO. So let's talk about UFOs now. And also for you guys to know more about the technology that we use, which is patented, by the way. I am highlighting now on the screen a URL or a QR code that you can scan and go take a look at that on our website, so you will have more information. But basically, UFO stands for unfilled orders. And they look like flying saucers, right? As we can see. But basically, when it's you have a flying saucer, a UFO, which is green color, it means buy orders. When you have a red UFO, it means sell orders. And last week we had sell unfilled orders at this price point. There was a red UFO right here, and it created this move down, as we can see. And now we have green unfilled orders at this price point, and you can see what happened. It already happened from this price point before, and it's happening again. And it looks like it's actually going to change the climate to become blue, right? So we can see all of this going on the chart, and that's why it's very important to do this 3D analysis of the markets, where the first dimension is understanding the climate, so what's likely going to happen statistically speaking if you forget about everything else. But of course, we don't forget about everything else. We also add the understanding of where the unfilled orders are, where unfilled orders to buy are located at 4369.5, and unfilled orders to sell are located at 4595.25. So what's likely going to happen here is that we're going to have a climate that extends all the way to here before it turns again. That's what's likely going to happen. If we change to blue, then a normal thing to happen is 8 on the way up. Okay, now again, right now, as we are doing this live recording, we're still in a red climate, so we cannot jump the gun, but watch for that blue dot tomorrow. Given the fact that we have this little gray line popping from below, there is a high chance of a blue dot tomorrow, and once that's confirmed, then setting trades in that particular direction would make sense, again, based on your trading rules and all of that. Okay, so dimension number 1 was the climate. Dimension number 2, we talked about it, was the unfilled orders to buy and sell, 45.95 to sell, 43.69 to buy. The next dimension is going to be the expected moves. And in this case, I'm not going to show you that on the chart. I'm just going to talk about it here with the figures, because this is information extracted out of looking at options on the S&P 500 index and their prices. And then what we do is that we reverse engineer the pricing models for options. And basically we conclude that given the prices of the options, what's implied, what's expected is 47 points a day as a move, 105 points a week as a move, 299 points as a move. Again, this is a one standard deviation. So in other words, that's expected. That's a normal thing to happen. That's why we call it the expected moves. So now you know more about direction. You know more about turning points for entries and exits with the UFOs. And you know more about speed of movement, which may confirm that this is a very boring market or a very exciting market for you to trade, which in this case, I think it falls into the category of exciting, definitely a great market to trade. Okay, so now that you understand better the 3Ds, in case you are new to our sessions, if not, of course, you know these. So we are now going to move into the next market, which is WTI crude oil. This is a market that trades in the NYMEX, a powerful exchange under the hands of the CME group. And we're going to start looking at the climate, which, as you can see, it's rainy for crude oil. Okay, I didn't want to go down. Give me a moment. Here. Okay, so let's go back to the real-time charts. And we're going to load crude oil, and let's go for it. Okay, now we're going to fly. Okay, we're going to look at those markets, speed of the light. Okay, so first market, crude oil, down climate. Statistics suggest 6 is a normal thing to happen. We are currently in candle number 9. So this down climate has been lasting for too long, statistically speaking. The reality is that we haven't hit the buy orders. So we may need to continue going down for a little bit until we have a serious reversal. So buy orders, 76.87, sell orders, 86.76, in the context of a down climate, which is overextended. But again, there is nothing to stop it so far unless buy orders come in, which could happen tomorrow, next time. Our UFO technology is real time. So again, when you look at our website and if you choose to turn it on, subscribe and become a user of our technology on your TradingView or other platforms that we support, you will see that on our website. So you will have this updating real time for you. Expected moves, 1.45 points a day, 3.20 points a week, 6.66 points a month. This is what's expected, and this is the picture of crude oil that is on the newsletter, but we saw it real time, so I will skip it and go for the next one, which is the COMEX gold future. So this is another CME exchange, COMEX, and we are talking about gold, 1, 2, 3. We are talking about a market which is currently in an up climate. So we can see the blue color. Now, careful, those are thin dots. Thin dots means the climate is not confirmed. So yes, indeed, there is some directional component that suggests something is going up. But at the same time, statistically speaking, we do not have a statistical advantage by either going long or short at this moment in time. So again, it all depends on your trading styles and things like that. But definitely, if it's me, when I see a condition like that, I just go trade something else until tomorrow, where I will have another dot, and odds are the next dot may be thick. And then, I know what to do, either go long if it's blue or go short if it's red, based on my trading rules and setting entries and exits and everything else, okay? Talking about entries and exits, the UFOs to sell are 1954.5, UFOs to buy 1828.7. So I would say that if gold rallies a bit more and sell orders kick in, there is nothing to stop gold from falling all the way to 1828, okay? So we may see a spectacular movement in the price of gold on the way down, and those are the price points which are relevant. And then from a point of view of expected moves, we look at options on gold, and when looking at those markets, we can see that the expected move is 15 points a day, 33 points a week, 70 points per month. This would be the speed of movement. Going back out of curiosity to here, from 54 to 28, we're talking about 128 points. So it may take 2 months to get there, but of course, because there are no UFOs in between, we may get to see a very intense speed of movement to the downside, which typically happen when there are no buy orders. okay, and therefore it's free fall because there is nothing to stop it. So we may get to see a lot of increase of volatility on gold in the following days, unless buy orders show up, and then they will show on the screen in the form of green UFOs. Next market that we're going to explore is the ICE US dollar index futures, another very relevant market, the most important currency in the world, trades in the ICE exchange in the US, as well in the ICE exchange in Singapore, and it's a futures contract. So very relevant market, okay, because everything we trade is priced in dollars in the end, isn't it? So we have a blue climate, which has been incredible, 22 candles, where statistics suggest 5 is a normal thing to happen. I mean, we had a couple of waves before already where the dollar index is changing, that is showing that it really wants to go up. Of course, this has a lot to do with probably the increase of interest rates in the US, which imply a lot of currencies are converted into US dollars to benefit from that increased interest rate. So yeah, of course, you can see how the pattern is changing from what a normal behavior would be. But still, again, understanding what a normal behavior is certainly useful. And here, what is really impactful really is not only that we had this crazy leg up with 22 candles, right? But most importantly, look at the crazy wide UFO that just was created here between 103 something to 101.60. That's a lot of buy orders here, okay? So many buy orders all the way to 105. So I would say that probably this market may end up taking a break because, again, 22 candles is a lot. So it may have to come down to where the buy orders are, and then we are probably on the way all the way to 105, okay? So this is what we have in the case of the US dollar index futures. So 22 out of 5, sunny climate, sell orders 105.33, buy orders 103.90, and expected moves basically copy paste from last week, 0.48 points a day, 1.06 points a week, 2.2 points a month. That is the expected move. Next market and last market that we're going to analyze is going to be our ICE-backed Bitcoin future, also another market that trades in the futures exchanges, both in the US and Singapore under Interexchange ICE. And we are talking about rainy climates, and we are talking about 8 out of 5 is a normal thing to happen. So take a look at the backed Bitcoin. We can see this market has been going down. We can also see the lack of liquidity in since some time ago, which, I mean, it's not really lack of liquidity. This market is very liquid. It's just that the huge amount of trading in digital assets that used to happen a few years back, it's not happening at all, okay? And this can be very, very clearly seen. Having said that, this market is still very large and very relevant. That's why we have it as part of the newsletter. And we are in a down climate, which has exceeded 5. 8 is more than 5, being 5 a normal thing to happen. So notice how we are approaching the buy orders located at 24,800, and we may have a turning point all the way to the 27,000 mark where the sell orders are. So this is the information you have in the screen here. And from an expected move point of view, 600 points a day, almost 1,500, 3,000 points a month. This is what's expected for this particular market. Okay, so economic calendar, very quick. The very big one this week is going to be on Friday. Unemployment number in the US. Of course, there are other things that are important. CPI, of course, in the world of inflation and all of that, everybody's going to be looking for that. Also in Europe, retail sales in Germany. Again, GDP in the US. So lots of important numbers, but nothing like the Friday unemployment number, which the world is watching and normally creates volatility. Okay, so watch for that. Enjoy the week, and to enjoy your trading even more, in case you have never done it, here is our Mystery to Mastery series book. We love it. It helps you trade better no matter what you trade, even though it uses Forex as examples. Really, this is a book for you to trade better no matter what you trade. We have been designated number one new release in 3 categories in Amazon. Endorsements for the New York Police Department on the cover, you name it. So again, enjoy it. It's I would say quite affordable to obtain in any bookstore. You can look at it online. Let me share a QR code just in case this makes it easier for you as well, so you can go pick it up. And also notice the red badge where it says here that you have a free online course, which also comes with free access to the UFOs for a number of months. So enjoy it. You can enjoy the book, the course, and our tools, and be prepared to be a much better trader, well equipped with everything you need to do well in the marketplace, okay, and stay safe. Anyway, my friends, as always a pleasure to spend this time at the beginning of the week with you guys. See you soon. See you on the next one, and we'll see you around in our community. In the meantime, we do live sessions on all of these, so you can find us on our website, our YouTube channel, etc., etc. You guys take care. Bye bye.